Real estate prices have gone from expensive to unrealistic. Major cities across the world have experienced prices which have become unaffordable to the working class. Interest rates in the UK are persistently low, allowing people to get mortgages for next to nothing. This has pushed prices higher and higher. What has changed? You came here for the truth, so let me unveil that for you. Today, we are going to look at the real estate prices in the UK, in London. Let's begin. Right here, the latest UK housing data add weight to the view that the residential property market is stuttering. Both demand and sales weakened in October, with agreed sales in most regions either flat or down. So today I'll get into some charts, I'll get into some articles today which will break this down for you, give you a little insight. Overall, prices are now close to steady, where we have this concealing a significant weakness in the London and the Eastern England property markets for the priciest homes. So remember that wherever you look, there are always pockets. There are pockets in real estate, there are pockets in stocks. If I say the stock market is rising, that's a very general term. We need to understand that there are different sectors within those markets, there are different stocks within those sectors. And depending how far you want to break it down, you'll get to a more realistic picture. In the capital, the largest proportion of respondents reported a drop in prices since 2009, with the net balance of almost 2/3 of those surveys reported a fall rather than a rise over the month. Although the figures were not as stark, most contributors also reported a decline in values that saw an increase over the past 3 months in the southeast areas and the northeast. Okay, so different areas you look at, you will see different prices, and that goes with any market throughout any period of time, right? But we need to understand that it's not all good right now. That's the news media, the way they report it to you, that everything is fine, everything is fine, everything is fine. They continue to push that message even as things are falling. London falling. Measure of house price in capital at the lowest level in 7 years. You are seeing the prices now maybe stretched a little bit, and the average person is unable to afford it, or they are now cautious and curious. So let's look at this here, the next one. The prime London market shows signs of regaining momentum. Okay, that's according to one person, but this next individual disagreed, saying prices across the best districts are continuing to soften, with the greatest falls at the top end of the market. And this is it. Brexit uncertainty and stamp duty continue to suppress market activity. And this other individual said, Brexit. Brexit is a big issue for a lot of businesses, for a lot of individuals, not because they believe anything will necessarily go wrong, but they're uncertain. They don't know what's going to happen. And so maybe they're just saying, let's stay put for now. Let's not move anywhere. Let's stay where we are. And let's address the situation as it happens. Because this whole Brexit issue has been going on for quite some time. And as far as I'm aware, there hasn't been much progress in recent times. So what's going to happen? The people have voted. They want to get out. The government has said they're going to do it. But I don't see any progress. So it's really stalled right now, and the people are they just want to get it on with. Look at this. Regional breakdown. Prices over the last 3 months. You could see London being the most extreme example. This is the net balance percentage here. You'll see it's down significantly, but look at other areas. You'll see that they're up significantly. So it depends on where you're looking here, but definitely London is suffering in this regard anyway. And last but not least, it's not all doom and gloom in London's property market. Yes, there is pessimism and there are falling prices. Yes, plenty of indicators show London in the grip of a slowdown. And there are a record number of homes under construction that don't yet have buyers. Year on year, fewer homes sold every month in 2017 except April. But then it says there are pockets. Sure, that goes with anything. I mean, if you look in the recession, financial crisis, while many stocks were on a decline for a long period of time, you saw certain stocks rising. Not many, but it does happen. In any recession, in any problematic area, you always find little gems here and there. But as a whole, the market may not do well. And it's the same with real estate as well. You may see different pockets that are doing well, or they're not nearly as affected by any particular crisis. Maybe they're sheltered in some way. Depends on the area, right? But understand that this is a trend that occurs. It starts in one city, it expands, it starts to go out further and further, and then the dominoes begin to fall. So look at this and be realistic about it. Because the news media, the financial media, they're not going to be realistic about it. They're always going to try to make it seem like everything is just fine. And I try to do, if anything, quite the opposite. We need to look at it for how it is, because when somebody is buying a home and they have, let's say, $1 million worth of mortgage, and it's just two people that work, working class jobs that really can't afford it. But as long as they mortgage it off and they'll pay it off within a 30-year period, and as long as interest rates never rise, well, then they're fine. But how realistic is that? That over a 30-year period, the amount of debt that you carry is not going to be a burden to you at some point in that 30-year period. It's so unrealistic. It's so silly that people don't think of that. They're saying, I can afford the payments. I'm paying, let's say, $2,000 a month on my mortgage, and between the two of us, two incomes that we have, we are more than capable. Absolutely. I totally agree. But what if you've got that fixed interest rate mortgage for a 5-year period? Hopefully you got a fixed rate. Most people don't. You got a fixed rate mortgage, 5-year period. 5 years comes up, interest rates are twice as high as they were before. Oh, well, that's going to be a problem. But people don't consider that. They just say, look, I can afford it now, today. And that is such a big mistake that people make. If you're taking on these huge mortgages, and even if you can pay them, most of the time they don't, but even if you can pay the bills now, can you pay them if interest rates rise? And the answer is, for many, no. That's all for this video. If you found it informative, please give me a thumbs up. Remember that when you give me a thumbs up, it pushes these videos higher up into the YouTube search rankings. So every time you do that, I do appreciate it. I'm always looking for the thumbs up there to make sure that people like the content. And if you don't like the content, if you don't like my face, if you don't like my voice, then give me a thumbs down. Have an opinion. That's all. Take a look at the links in the description. You'll see the one for looking inside my book. Amazon has a look inside feature which will allow you to flip through the pages of these books to see if you like them. Take care.